Bitcoin took a tumble yesterday, dropping by 6.5% in a short space of time. This is kind of in line with our expectations, and I am going to now review what I think is likely to happen next on the 1 hour and 1 day timeframes. As I get into today's video, if you do find it useful and informative, smash that like button. If you're new, subscribe, and let's jump right down into the charts. This here is going to be our starting point. This is Bitcoin paired up with USDT on the 1 hour Binance chart. Now, yesterday, we were looking at the resistance coming in on this 50 EMA. Okay, we saw this on Monday. We were seeing a little relief rally here yesterday at the point of recording, which is approximately 5 a.m. UTC. And we can see that we started to see this immediate kind of pullback down. We actually saw this particular candle on the 10-100-hour UTC candle yesterday, which was a break of the existing low and coming down to our 200 EMA. This was our expectation yesterday. We were talking about the idea of going short in and around the rejection of the 50 EMA with the idea of going down towards the 200 EMA, looking for a 1.5 risk reward ratio. Of course, guys, you can check out yesterday's video for more details on that. We were hoping to find support on this this 200 EMA here, and we were thinking that maybe this would be the place to go long with a really tight stop loss just below the 200 EMA and target out the 50 EMA, 50 SMA. However, you can see here that we couldn't find decent support level. We kind of came down, we bounced from it, but the second candle was a dojo candle. This here would have been a weakness in the market. You can see there was a bit of buying pressure. It almost looks a bit like a hammer, but this one here, led by this downward price pressure, still finding support, would have not been the ideal position. In fact, I would have looked for this particular rebounce and test of the 200 EMA for a short position once again. Okay, so we saw this break here of the 200. We saw that the market was still undecided, relief rally, and we got this area of resistance forming with another dojo candle right here, showing us that there isn't a huge appetite for buying. So this rejection with a couple of tests on the point, followed by the red candle here, the sell pressure, this would have been the short entry. So what we would have done had I been around at 2100 last night, we would have potentially gone short with a stop loss higher than the swing low. And of course, we would only target 1.5 risk reward ratio because we're all about taking the profit as we see it. And this one here would have been incredibly profitable had we gone for something deeper. Okay, but there would have been no kind of signs as to where that would have gone. So we would have been able to trade this very, very nicely over the last kind of day or so. And yeah, we've seen this come all the way down to that low trend line. We saw a low come in at the moment, coming in at $58,034. Okay, so we completely lost the 200 EMA, which was the $61,000 200 EMA. Lost that, tested it as resistance, broke down all the way to this previous area, which happens to also coincide with this previous area of consolidation and previous support levels. Now, what does this mean for the price action? What's the next move? Well, taking a look at everything here for Bitcoin, I expect a little bit of a relief rally to the upside, but I still see this one potentially slipping further down. What we want to do is we want to measure a few things. I want to see how deep of a retracement we've had so far as to whether or not we need to be overly too concerned. And yeah, we should probably be concerned. Okay, so we are looking for this relief rally to be a wave 4. And I would typically expect this to go somewhere between 50 and 38.2%, which would put it right in this little pocket right in here, which is currently where it is kind of going up to at the moment. You can see that we've kind of tapped into this already at $59,590, but the idea is potentially to come up to the $60,000. Now, if we come on over and we see where that potentially could lie, we can see that there's a brief area just in here of previous support also kind of coming in at that particular range of interest. I'm going to go ahead and pull that across so you guys can see right inside here between 59,724 and 60,100 exactly seems to be a very interesting area. So we'll be looking for a bit of a run to the upside. Now, technically speaking, because of the structures that we see here, we could rally up significantly higher. Okay, so we want to be aware of more of the 60,700 to 61,128, which 60,128, I believe, was also a previous area of consolidation just over here as well. So it'll be an interesting kind of point to keep an eye on. Invalidation or break of a bearish structure would happen if price rallies up higher than 61,473. Okay, so we already know that we have the swing low, which will, if we lose, obviously we're more bearish, right? Going down lower than $58,034. And if we break up higher than 61,473, well, we're bullish. We break that bearish structure. But for now, what we are seeing and what we're witnessing is a wave 1, wave 2, wave 3. This is wave 4. We'll come down into the 5th wave. Okay, so typically we would be looking for resistance to come in at $60,000. However, there's this really interesting area at $61,128, and so we'll keep a close eye on that. Okay, so for now, that's going to be the expectation. We're going to be looking to see whether or not we run out of momentum, whether we see some more sell pressure coming in here. We're looking for this run to the upside. I'm not going to go long. There's no reason to go long here. We're lower than the 200 EMA. We are basically coming up in what believed to be a wave 4. So the options here are actually to go short, but we won't want to go short until we get confirmation of the reversal, or alternatively, we get very close to that breakout. So if we do come up to a 61,128, for example, or 61,000, we could go short here with the idea of breaking down again in a really significant way, giving us a really nice risk-reward ratio, tight stop loss. We'll look for something around the 5 risk-reward ratio, 5 to 0, $5 of profit for every $1 of risk, and we'll look to come down to that previous swing low at 58,000. Okay, so it looks like it's kind of on track. So Bitcoin, yeah, it's been very profitable to be kind of trading this. This is a part of a bigger collapse though, because I do see this with the potential here of a 5-wave drop on a much larger scale, taking us down into those deeper ranges. Okay, so on the smaller time frame, guys, the key message, as I've kind of been talking about for a while now, is expect the unexpected and continue to see extreme volatility with extreme liquidations occurring. Let's go into our daily chart, because the daily chart is showing us exactly what I've been talking about with the liquidations. Okay, we have, and I've been talking about this pretty much daily for a while now, so I bore myself with it. I'm probably boring you guys with it, but you can see we liquidate the shorts on the moves to the upside, we liquidate the longs on the moves to the downside, and we basically just keep repeating this pattern over and over and over again. And we are looking for a pretty significant move to the downside over the next kind of 4 weeks or so, in my opinion. I think people on Twitter or on X are now referring to September as Rectember, and for probably good reason, right? Because we are looking for this range of $40,000 to $44,000. This is where we think the next kind of big pocket of liquidity is going to be extracted. Now, I don't think we're necessarily going to go straight down there, right? Because in the world of crypto, obviously we hit that upper target of expectation, which was actually short of what it should do. But we found this pocket of resistance up at that $65,000, right? And we can see this move to the downside. I wouldn't be surprised if we come up here again just to liquidate anyone going short on the market before we move on down. But ultimately, we are in daily lower highs and lower lows, and we are targeting out $40,000 to $44,000. This is something I've been talking about for weeks. You could go check on the channel, search Bitcoin, and you'll find that we've been talking about the idea of $44,000, $40,000 Bitcoin for weeks at this point. And we kind of expect this to play out over September. Obviously, it might eke into a little bit longer, maybe go into October, but for the most part, we are thinking that the Federal Reserve interest rates being reduced is going to be a catalyst to sell-off, even though it's an incredibly bullish event. What we are witnessing within the crypto market and within the stock market is a lack of liquidity, even though that there's this idea that global liquidity is on the up, and we can actually see that the market's very illiquid. This is very obvious when we start taking into consideration volume profiles. So here on the daily time frame for Binance, if I zoom out of this just far enough, you can really see how illiquid the market is, right? Ever since kind of March 2023, the market just hasn't been that liquid. Okay, obviously a lot of flows or Bitcoin flows have moved over to ETFs, and we have seen a significant amount of inflows recently when it comes to Bitcoin ETFs, but it is still, quite small in comparison to where things need to be, in my opinion, for a bullish market. So, it's an interesting time that Bitcoin finds itself in. If we take a look at the stochastic RSI, we can see some really good positives being made here, that we have this really fast correcting stochastic RSI. This is a huge win for Bitcoin. Even though the price action is coming down quite aggressively, by the time we kind of come into these lower ranges, which of course we're minimum expectation is 49k. We don't have to go down to 44, 40, but I do think it's probable. But the minimum will be 49k, in my opinion. We can see the stochastic RSI is aggressively moving to the oversold area. This gives us the idea that there isn't a huge amount of sell pressure, even though price is kind of being manipulated and pushed in these directions and liquidity is being extracted from the market. The positive here is that the stochastic RSI is showing us that there isn't a huge amount of volume in the market, and that is why it's moving as fast as it is. So it's positive. This is a positive thing to kind of note on Bitcoin's price action. It's good to see that things are finally progressing progressing. We'd obviously hit those upper targets of resistance. Shorting the market here could be profitable. We obviously closed lower than the 200-day EMA. This is a bearish sign as well. So although it might be a really rally to the upside, ultimately we are going to be looking at resistance on that 200-day EMA, and we are of course looking for this move to the downside. This is very much in line with smart money concepts, which is also in a bearish structure on the daily time frame. The big liquidity pools, fair value gaps, pockets of illiquidity in the charts here. We've filled all the ones to the upside. Now we've got some to the downside. Obviously, the fair value gaps do get filled out. There's a high tendency, not a guarantee, a high tendency to fill them out. So here you can see a big fair value gap on yesterday's candle. And chances are at some point we will rally up to that 62,745, where that candle obviously started, which is obviously no coincidence that this also happened to be where we saw those minor change of characters on the smaller time frames. So for the most part, we're in pretty decent positions when it comes to Bitcoin and to its kind of daily chart and where everything is heading. And for the most part, yeah, we're heading down $44,000 in my opinion, but I will be paying close attention to all of the support levels on the way down as to whether or not that's going to change and whether we can start thinking about bigger runs to the upside. Now guys, that's going to wrap up today's video. If you have found it useful and informative, smash that like button. If you're new to the channel, subscribe, and if you haven't done so yet, why don't you check out my second channel just here where I go through the Cardano technical analysis every single day.